Hi, everyone. We are now going to take a look at problem 3.3, which is in your book on page 151. And in this, they give us the post-closing trial balance for Almway Corporation. So that means that retained earnings balance has already been updated. And then some additional information that's required for us to know about in order to complete the classified balance sheet. So what I always suggest, and this is the approach how you should go with these types of problems, is really read through that additional information and mark right on that trial balance near the numbers how it's affecting. For instance, the first one says the investment in equity securities accounts includes an investment in common stock of another corporation. 30,000, which management intends to hold for at least 3 years. The balance of these investments is intended to be sold in the coming year. So that means over on the investment in equity securities, you want to put like a little line going up and one coming down from your investment in equity securities and say, okay, 30,000 of that will be a current asset. The remaining, I think it's 80,000 will be considered an investment. Opposite. 30,000 is long-term and be in the investment category, and the other 80,000 is considered short-term. The land account includes land which costs 25,000, which the company does not use and is not currently listed. So 25,000 of that 90,000 should be categorized as an investment because it's not being used in the business, and then the other 65,000 would be considered property, plant, and equipment. The cash account includes 15,000 restricted in a fund to pay future bonds that mature in 2024 and 23,000 restricted in a 3-month treasury bill. Well, up here of the 45,000, 15,000 of it is in a bond sinking fund or a restricted cash account, which will pay a long-term liability. Because of that, it should be listed as a long-term asset. And that 23,000 restricted in a 3-month treasury bill is now a cash equivalent. So we would include it on the balance sheet with cash, but make sure we term it cash and cash equivalent. The notes payable account consists of 30,000 in a 6-month note. So 30,000 of that is short-term, current. 50,000 in a note due in 6 years, so that's a long-term portion. And then the remaining 50,000 will be paid off in $10,000 installments each year. So another 10,000 would be considered current liability, and the remaining 40,000 of that note a long-term liability. So you can mark that on the trial balance. The 60,000 balance in accounts receivable already has 8,000 of allowance for uncollectible accounts subtracted from it. So you want to note that. So the original balance of accounts receivable is 68,000, and then there's the allowance for uncollectible accounts of 8,000. The common stock account represents 100,000 shares of no par value common stock issued and outstanding. The corporation has 5,000 shares authorized. So we have to include that on our balance sheet. So I think when you take that approach, I know you don't see my book, but you see the answer key in front of you, it helps you refine that trial balance so that you know what parts will be heading to what areas of the different categories of assets, liabilities. So let's do our, just highlighting, or I'm just highlighting in my own book, the assets. So we need to categorize these assets between current assets and long-term assets. Further, we categorize long-term assets into being investment assets, which are just assets that we buy and hold on in the company. We don't use them in the operations. They're just purely property we own to make money off of. Property, plant, and equipment, which are those tangible assets that we actually use in the business on a long-term basis. and intangible assets, which are assets we use in the company that lack physical form. They're more of a legal right that we can buy and may have value on our balance sheet. So of our first items, we already talked about cash. Cash and cash equivalents should be the first item in our current assets. Remember, we list these in order of financial liquidity, 30,000. Cash equivalents are those very short-term investments that will mature within 3 months. Then we list short-term investments because that's the next most liquid asset. And we already said 30 or 80,000, I keep saying 30, 80,000 of those equity securities are considered short-term investments. Then we will list accounts receivable. Its gross amount, which was the original balance in the account, is 68,000. Subtract the contra account receivable account, allowance for uncollectible accounts. That's the part we don't expect to collect of the 68,000. And you record or report the net realizable value, or what we call net accounts receivables, the 60. Inventory doesn't have any change from the trial balance, and that's a current asset, as well as prepaid insurance. And they tell us in the prepaid insurance that will be used up by September of 2022, so within a year. So these are our current assets that should have been isolated and totaled up. The next section is our first long-term asset, investments. So the investment in equity securities, the portion that we're going to hold for 3 years, is categorized here, 30,000. The land that's being held for resale, it's not being used in the business, 25,000. And the part of cash that's been restricted to pay off long-term bonds is also in the investment area. So we total them up, total investments. Then we go to property, plant, and equipment. Land has a $65,000 balance here because that's the part of the land account that is actually used in the business. Then we list the buildings. Now, if you subtract accumulated depreciation buildings from buildings and report the net, that's also correct. But your author takes the, this is just another approach. They add up all the costs that are in the property, plant, and equipment category. So the land 65, the buildings of 420, and then the equipment of 110. And then they subtract the two accumulated depreciation accounts, one related to the building and one related to the equipment. So it's really what your style is. Either way is correct. Make sure though you subtract that accumulated depreciation overall, and then you get net property, plant, and equipment, 435,000. The final long-term asset is the intangible asset category. And here we have a patent. And patent, 10,000. Then we add up our current assets, 379, to the 70,000 in investments, to the 435,000 in net property, plant, and equipment, and then the 10,000 in patents. Total assets, 894,000. Now let's go to the liabilities. Liabilities are also categorized between current and long-term. Usually accounts payable is the first listed liability, but from there, it doesn't really matter. Interest payable, it doesn't tell us that it's not current, so it's current. Remember, the portion of the notes payable that is current, the 30,000 that is due in 6 months. Now, if you're saying, well, what about that 10,000? We call that the current portion or current maturity of an otherwise long-term debt. The 30,000 note is all due in 6 months. The 10,000 is just a part of a $50,000 note that is due in the coming year. So that's why we separate them out. Add them up, total current liabilities, 135,000. The remaining long-term note payable would be the $50,000 that's due in 6 years, and the $40,000 remaining of that $50,000 note that will be paid beyond the coming year in a long-term character. Bonds payable, I don't think they tell us the bonds payable. No, so the assumption is, oh, they do tell us. They tell us those bonds are going to be paid off in 2024, and that was an additional information 3. So we know they're long-term. Add those two together, total long-term liabilities are $330,000. Add those to your current liabilities, total liabilities $465,000. In the final area, shareholders' equity, common stock, and the balance in the account is $300,000. But don't forget, we have to describe the common stock on the balance sheet. There's no par value, and we have to say how many shares are authorized, 500,000, how many shares are issued, and how many shares are outstanding. So 100,000 shares have been issued or have been sold, and the company has not purchased back any of those shares as treasury stock. If they had, they would subtract the treasury shares, the common stock they own of itself, from that 100,000 to get the outstanding amount. And then we list retained earnings with its balance from the post-closing trial balance, because that's been updated for this year's net income and dividends. Total shareholders' equity, $429,000. Add that to your total liabilities and shareholder equity, $894,000. It agrees to our total assets. So that's my suggestion when you're working on a problem like this. When there's additional information, first read all that additional information and determine how it impacts the numbers on your trial balance. And you could draw, some, notes for yourself right on your trial balance. So when you start working on that balance sheet, you catch everything and you put it in the proper category. So if you have any questions, please post them to the discussion board.